this is no longer, this economic rescue is no longer a bailout or a handout to Wall Street as originally proposed by the Bush administration. It is now, I would say, more a loan and asset acquisition and equity package. First of all, the Congress will authorize $700 billion, but appropriate only only 250 of that amount in this legislation. The 250 will be immediately available to the Secretary of Treasury for the purposes of the plan as spelled out in the specifics. The Secretary then must carry out the specifics of the management of the rescue plan and report to Congress on progress made and on and if needed request the additional $100 billion. The President, of course this will be in the next administration, the President then must renew the request for the balance of the $350 billion and make a showing to Congress of why that additional funding is needed. The authorization is in place, but the appropriation would have to be subsequently approved by Congress. There will be limits on compensation for CEOs, and it looks very likely the top 4 management personnel of companies to be assisted in this rescue plan. The purpose is to avoid the Washington Mutual situation where the CEO was in place 3 weeks and walked away with $22 million. The compensation will be limited. There won't be golden or other parachutes for those CEOs. They will during anyone who receives assistance, any company receives assistance, their CEOs, top management people will be limited in their compensation and other deductibility items that normally go with those compensation packages. There will be an oversight board whose membership will be spelled out in the bill and will likely consist at least of the Inspector General of the Department of Treasury and the Government Accountability Office Director, and others yet to be spelled out and named. We'll get those specifics later. And that oversight board is an executive board with authority to take action, stop transactions that are considered risky or dangerous or beyond the scope of the rescue plan, and report to Congress. There will be a comparable House-Senate oversight entity, but it will have the usual legislative oversight authority, that is not executive power to withhold or stop or delay actions, but simply to oversee and report. The language of the package also provides that in working out some of these failed or risky loan packages and securitized investments, the federal government, the Treasury specifically, may invest capital in exchange for non-voting equity in the company, or in the alternative may buy assets and receive receive warrants. Assets means mortgages, and receive warrants from the distressed companies in the value of the asset, and that imposes an obligation on the part of the company to compensate the government in the amount of those warrants, meaning there's a floor on the value. Long term, that is 5 years after enactment or after all purchased assets have been sold, the Secretary of the Treasury shall report to Congress on the net gain or net loss. If there is a loss, the IRS would impose a fee upon the financial services entities who are responsible for the loss, a fee not to exceed 2% of taxable income of those financial service entities, in effect creating an insurance policy that will protect taxpayer interests, so that whatever loss there is will be repaid to the public by those entities that incurred the loss. Of the government will not, and the taxpayers will not experience and shoulder that loss. That is the broad oversight, how should I say, summary of the rescue plan as it stands at this moment.